Today is a story all about stocks. Makes sense. Top pickers like me would get mocked as good stocks explode and the bad get rocked. And the ugly kill investors as those stocks get clocked. But here comes a battle, so get loaded and locked.
Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. So the stock market spent most of the week struggling last week, as earnings season is in full force, and a lot of bad earnings coming out, well, through Thursday, weighed on stocks. The techs really underperformed and actually had a bad day on Wednesday. And then comes Friday when Amazon, Google, Microsoft, Intel absolutely explodes to the upside. And Friday sent the market up big, with the NASDAQ absolutely soaring in an orgasmic move. We can hardly know whether or not this is the climax of this movie, but NASDAQ popping over 170 points to the upside, nearly 3%, in an absolutely incredible move that very well is catching everybody by surprise. You got to wonder if the shorts are really stepping up to get covered in here, and who could be buying at this level? Well, maybe only really long-term holders. I've got more to say about that in a couple of minutes. You know, you can't really get a 1% down move in the market, but clearly with the type of up move that we're seeing today in the NASDAQ, well, the path of least resistance seems like it's still to the upside. Let's take a look at our 60-minute chart of the S&P 500 and see what happened this week. You can see that, well, the market did struggle pretty much mostly through Thursday, as we had on Monday, Abe's wins big in the snap elections. That, you know, gave a little bit of lift to markets overnight, and then some news came out that POTUS was going to soon announce his new Fed selection. Notice the word new Fed. He used that. So pretty much giveaway that it's not likely to be Yellen, and with the potential that it's going to be Warsh, who would be much a hawk. I think the market suffered on that, and it was ready for some decline as it came down in here. Worldwide bonds got hit really hard on Tuesday, and the U.S. bond market followed to the downside. There's a report here that comes out before the opening on Tuesday that iPhone orders were halved, and Apple was down strongly but then bounced. That's this decline here and then this rally here, as news came out that the iPhone X would be in stores on November 3rd, and Triple M and CAT lifted the Dow. They had huge upside moves, and the Dow was up 180 points, then eventually getting over 200 points, and that was this move in here. But you could see the broad market really struggled in there, and the broad market barely up on the week overall. Here the bonds were down again on strong new orders, and then stocks fell really hard as earnings started to weigh. The biotechs were weak all week long, and this really weighed on it. You could see a big decline that got hit in the market there, and that actually made the low of the week. Thursday continued to struggle, but the ECB news came out, and that lifted the dollar. They're cutting QE to 30 billion. billion from 60. That's in half. But they're extending it to, well, so far QE forever. And the market considered that to be extraordinarily dovish because, well, they're going to stay where they are and continuing to buy a lot of their bonds and who knows what else. So that killed the dollar. I mean, rallied the dollar, killed the euro, excuse me. And so the market got a little bit of a lift in here early in the day, but you could see selling came in again. Well, then on Thursday after the close, Google, Microsoft, Amazon, Intel, they surge on earnings, and also news comes out that CVS has put in a $200 bid for Aetna. That's really an Amazon story, as Amazon is moving into the drug market, and CVS feels very threatened by that, as Amazon gets a wholesale license for the drug business. That started off the market overnight moving to the upside, and you could see that it has really continued in here. But the S&P 500 only barely ekes out an all-time high that you could see there, and that's not a huge move for the S&P 500 on the week, but overall the market is up, and we would call it fairly strong. So that's a look at the 60-minute chart of the S&P 500. I said fairly strong. Well, we'll call it, you know, amazingly strong. How's that? S&P 500, the Dow, the fractionally higher on the week. The Russell, which is heavily weighed by financials and the third tier of the market, that is actually fractionally lower on the week. So we've got some disparity going on in the market. But the NASDAQ is the big winner with a huge leap on Friday, up about 1.5% on the week. Bond market, 30-year bonds up a point, down a point, and the 10-year yields up about 5 basis points, gets now up to 243, getting a little bit of a lift in there. I wonder when $3 yields, 3% yields are coming. Well, I think it's early part of next year. The dollar up, but not all that much. Our upside target was about 95, and it gets up there, just above it, up about 1/3 of a point on the week, and that's on the higher U.S. yields as the dollar gets bid. The gold and silver market, of course, weaker as the dollar is stronger. They're inversely correlated. Gold losing about $10, silver down about 27 cents, and our short-term view, we're going to show that we actually believe that downtrend in gold and silver will at least temporarily be changing. So we're looking for the bottom in gold and silver, a trading bottom, coming up very shortly. Oil market, according to Total Petroleum, they say the market is getting more in balance. There's a lot of that kind of a talk. Plus overall OPEC talking about extending cuts. So it's a positive picture that we've been drawing in the energy market. If you watch our Future Speak show on Wednesday, you would have seen that. And oil market moves up a total of about $1.70 on the week. So that's solid gains in there for the oil market. So the stock market, keeps, looking like it's rolling over and then popping up to new highs. And that's in spite of a coming tax battle, the Catalonia secession from Spain, higher interest rates, bonds essentially coming apart in Europe, and nothing has been able to stop this charging bull. Well, I'm always willing to show something that may be a sign, and we see an unusual pattern in the S&P 500 now on the intermediate chart. Our intermediate charts are weekly charts, and we'll give a little lesson on candlesticks right here and the psychology behind it. I actually have a video in my library that I look at my 22 favorite candlestick patterns and give this psychology as it came out of Japan on each of those patterns. Well, there is psychology in every single one, and I'm going to show you that right now. So the chart we're looking at now is my weekly cycle chart on the S&P 500. And what we're looking at, and that I really want to focus on, is this huge hanging man. Now, this type of a pattern comes often at peaks, and similar patterns to this, which we would call hammers, at bottoms. We've had many hammer bottoms over these last 8 years in the stock market when it corrected, but not many hanging man tops. So the psychology behind this hanging man top in here is that what happens is that, well, the market opens pretty much near the high, and then during the week it sells off. And then late in the week, something happens and the buyers come back in and push it back up to that high. So, that late buyers is often, short coverings coming in because they're getting absolutely killed, and late buyers getting sucked in. And it's called a hanging man because the psychology behind it is that the buyers are getting hung. In other words, it's a sign that that market is peaking, and that that hanging man that we see right over there is giving a signal of that. Buyers coming in late and essentially getting hung. To prove it, you actually need a down week. In other words, you need to start giving up here and not make a new high that holds. You can eke up to a new high, but basically you would see a red bar following it in here. Sometimes you get two little doji stars, and then the next week is where they come down. But basically, for this to be proven, you need to not make much more upside ground, and in the next 1 or 2 weeks have a pretty good downside red bar, maybe one that looks something like this one right over here, and that's what I would guess would happen based on this. Now, the S&P 500 is, as I said, this week underperforming, just barely up right now as we get into our last hour of the day. We're just up maybe a third of a percentage point on the week. So the broad market, struggling this week, despite the fact that what we see here on Friday is having a good up move. That's the hanging man. And were this to work and actually be making the top, we would see this hanging man stall the market, and then all of a sudden sellers start to come in. Keep your eye on that. That's a huge pattern right there, and the psychology behind it is important, and it could mean that the buyers that are coming in end of the week are getting hung. Massive move in Amazon, $125 plus. That's some big gains, and that says that somebody got stuck, and maybe that does mean that there's something climactic happening in this market. That's it for the opening segment. We'll be right back with the best and worst stocks for the week. All right, every week I bring you the best and worst stocks for the week. Before I do that, I want to remind you to follow me on Twitter, and that's at askSlim. If you like what you see here, then on YouTube, give me a thumbs up, and really pleased to get your comments on what I present. If you like the charts that you are seeing right now, or you want to get the videos that I've mentioned in the past here, we have more than 250 videos for traders in our library that I've produced and essentially share my experience in the markets over these last 43 years. So you could get all of these charts I'm going to show you. We have 80 charts with the best traded futures and stocks that get sent out every week with all of our cycle analysis. Plus, level 4 members can ask me for analysis on any charts that they like. So that gives you a good opportunity to see how the cycle analysis works. Plus, you get our rankings and trade setups and all of our videos for just a trial of just $64.50, and that will, what is that, like $16 a week for all of these charts and all of the stuff that we send out. It's really worth trying it. Do all the watching you want, and you don't like it, you can cancel at that point. But we really want to give you an opportunity to get exposed to this. So write me an email, slim@askSlim.com. You can then ask me for our trials, and I'll be glad to send you the link, level 4, level 3, level 2. So that's, I think, a great opportunity for you to do some fantastic learning. All right, best stocks of the week coming up. There are so many massive moves this week that what I want to do is I want to take the 10 best and 10 worst, essentially, and give you those best, meaning biggest move, biggest or best chart patterns, and some of the stuff in here that we loved and some of the stuff in here that we're wrong on. So interesting. We're going to go with lots of stuff that had giant moves. And one of the stocks that we have believed that was way overpriced because of an extraordinarily high PE. This is one of the ones that we're wrong on. Now, what's interesting is that this stock, First Solar, based on the price level that it was at the end of the year, I had it listed in my best 14 stocks for 2017, and here it's absolutely roaring ahead. And all along I've been thinking it's massively overpriced, and here we go. One of the things that made it overpriced was that the earnings were really downgraded like 4 straight times in a row, and now what we have is earnings significantly upgraded. Now they're looking at 221 for the year, so a PE that was like 50 something is now down a forward PE to about 30, and that's with only $1.30 anticipated in the next year. So First Solar gets a huge upside move, something I expected on January 1st of this year, but along the way, as these earnings got downgraded, I had a lot of doubts. But when the earnings come in as huge as they did in here, I mean almost double what was expected, that really certainly helps the PE. So you can see our upward objective in here is to about $64 on that stock, which is the major 78.6% Fibonacci retracement. 20% gain on the week, and forget that high PE because it doesn't look like it matters at the moment because earnings just a blowout. Twitter's a stock that we have loved. Now, we kept saying we thought it was going to go up. All the patterns look like it, and look at this move in the stock this week, 20% plus on the upside. And here the background news is just getting better and better, and it doesn't hurt that Google's mobile ads were really strong also. So what we're looking for in here is trading up to somewhere around over $22 in here. It's not all that far anymore after this big move, and then probably getting some kind of a correction. So any pullback in here we think is just a buy. It's a very solid pattern. As we really like the stock. They reported a smaller loss than expected, and that really helped in there. Now, Amazon is one that we're going to say we have blown the call on this one. We have cautioned on it on 2 different videos. And in the beginning of the year, I said it was one of the riskiest stocks for the year. So, like I said, I'm going to get some right and some wrong, and I expect and do get more right than wrong. Now, here's the pattern that we had in here, and I left this right in here. This cycle right there, what we believed was it was rolling over, and then you might get a little more, but then down like that. This was a red zone right in here because of this little breakdown, and that proved to be a false breakdown in there, and a very minor violation. Get support at that 34-week moving average twice right over there. And then the earnings come out, and they are explosive, absolutely huge. They guide higher, but their year guidance was you could drive a truck through it. It was really wide and actually lower than the street expected for fiscal year, but their cloud business just absolutely explosive, and I think that's what really helped it. Now they're taking on the drug stocks, so this you could see gets well beyond anything that we expected in here on a massive move today of some 130 points, 13% on the day, some 12% up on the week, and this is just way different than we expected. Now, what we would look for now is some level somewhere up here that we're not certain of yet. We have to see where this settles out in here, and then rolling over for this correction out here into January. Now we have lots of stocks that point to January. I showed that in our video on Thursday, where I showed 35 stocks that basically pointed to peaking and then correcting into late December, early January. So this one, absolutely fantastic upside move. It is not a good call by us on that one at all. Well, who could know that their earnings were going to be that fabulous in the cloud? Deckers, take a look at this one. Earnings, a huge beat. The stock originally was down, and they were planning on potentially selling the stock, and then they came out and said, well, they're not going to do that anymore. They're not looking for buyers, and it went down. But then earnings were just absolutely explosive, and this engulfing pattern just absolutely is useless there when you see it reverse back up the way it did right in here. Again, we're looking for it to roll over. The price target up here is around 75, and then coming down into the January period, as so many stocks likely will. That's why we're looking for a correction in the fourth quarter. Now, Aetna, AET, this was a stock that we also held as risky. You could see our projection in here. Well, I mean, how could we possibly know, how could anybody possibly know that CVS was going to bid $200 for this stock as they try to fend off the Amazon move and try to get a solid hold in some other industry? And so this has been halted all day long. It's not even trading in there. It's up 10% on the week. It probably would be up 15% if they had allowed it to be trading. Anthem was another stock that we thought was risky, and then had this giant upside move. We still think it's risky into the fourth quarter, later in this fourth quarter, as it is likely to go into a correction. Also, it's driven up more than 7% on the week, really in sympathy to the Aetna move, as CVS says, well, there's more value in this group than anybody thought. So that's a look at the first 5 stocks. Now, the next, or first 6 stocks actually. The next 4 that we're going to look at are basically different industries, and techs, airlines, and home builders. The airlines basically have been in bad shape. Most of them look like they're rolling over. United look absolutely terrible. I'm going to show you some of those in the worst of the week. However, one stock that looks better and had big earnings, even though the group is in trouble, is SAVE, Spirit Airlines. So let's take a look here at SAVE, and you'll see in here that it's been in just huge trouble, and now essentially gets what very well may be a dead cat bounce. So you see that absolutely big crash in here. And then it gets a bounce, and I see it's struggling at just the 23%. That's really weak. It potentially could get up here to $42 at that resistance level right over there, but then again, decline out into January as this group in the airlines is really looking sad. The other big gainers in the technology category, Intel, INTC. Now, if you go watch our best of for the year in January on that show, we said that Intel, we believed, was going to be a born-again stock. That based on the semiconductors, and that we expected big moves in there, that this stock was likely to have some big moves. And it was on our list for best for 2017. Look at this stock. It did struggle, though, into summertime. Hit that support zone, gave you that engulfing pattern, and off to the races it is. So a big gain for the year in there, up about 20% for the year right now. And look at this move this week, up about 9% on the week, as their earnings were really good and margins really strong. So that really is a great looking stock in there. Microsoft, another huge gainer on the week, about 7% for a stock like this that's been already great. Look at that. I mean, we've been bullish on this one all along, and you can see, note that 13-week moving average, how it's just held it and held it. Note this corrective process right in here. So each of these are corrective periods when the cycles are pointing down to those nested lows. And you could see correction, modest correction, modest correction, modest correction. That's because this upward directional component is so strong that it doesn't let it come down and actually dances advancing on the 13-week versus the 34-week is exceptional. So you can see still goes up. This is the resistance confluence area up here. 87 to 88.5 approximately. That's kind of the area we think it's going to start to struggle and get start chopping around. So a really strong move in there. And the last one for the best of the week we're going to look at is Pulte Home. And look at that exceptional move in there as earnings were great. Analysts all over this thing, and guess what? This is another one on my list of best stocks for 2017. So, you know, I guess you could throw darts at this market. Well, maybe not early in the year to figure which were the ones that were going to have giant moves. But this stock up 60% on the year right now, just absolutely exploding to the upside. And we don't really have any good solid upside target in here right now, so we're going to just have to wait and see how this looks, and then when it starts to give some sign of peaking, we'll say something about it. But that's another stock that looks like at some point it's going to correct into January. It's amazing. Cycle analysis essentially gives you the timing for the repeating cyclical lows. The weekly patterns are the intermediate, and they tend to be absolutely the most consistent. So when we have so many of our stocks that we look at, more than 300, that project to corrective periods coming and into the early January period, it really gives us some sense that there is a correction coming into that period. So today might be just about, we don't know for sure, some kind of a last gasp. So that's the best of the week, and here comes So for the worst of the week, the worst stock by far of all the stocks that we do analysis on is Expedia. Note that that Trip, which is also an online travel, and Priceline looking like it's starting to roll over. Trip really in some trouble also, as that one threatens a breakdown, and Expedia, EXPE, is a stock that is broken. Now, what makes a broken stock in cyclical analysis? Well, the key, what gives you the first sign is what we call a negatively configured cycle. So take a look here, and you'll see that this stock is negatively configured. What does that mean? Well, you can see the low here, and you can see the low here, right? Those are lows. This is the corrective periods right in here. This is the rally period. So you see that? Here's your rally period in here, and then a really barely correcting and moving up to a new high. That's this, this, and this. That's what's supposed to happen when you get a bullish cycle like this and it can't correct, that it continues to move up to a new high. However, when you then get underneath the cycle low, which is right over here, it is a warning that the stock is going to move down through the cycle low period, where these nested bottoms are right over here. So that calls for this decline to continue down for another few weeks. You can see that. And that because it's negatively configured, it's very likely that, well, once this bottom is in place, it gets a minor rally and then heads lower again. So this is a stock that definitely looks topped. You can see a head and shoulders type pattern that formed in here. Here's your neckline over here, and it's already close to the objective on the downside. But this is a stock that's got long-term problems, and we would expect bad stuff there. Celgene, this is in the biotechs that have weighed on the market this week, and only the the big FANG stocks saved it late in the week. Look at this horrible pattern in here. This is another example of a stock that had a positive pattern that had a breakdown. So look at the low right over here. You see that? Now this is IBB, the blue one, which is the biotech index, and the pattern for Celgene is a bit different than the biotech index, but this was a perfect nested low in here, and then the rally. That's this right in here. Then it breaks that low right over here and absolutely collapses. Celgene just earnings a miss, sales a big miss. They guide lower, and nobody wants it. Gilead is a stock that just was living on its Hep C drug, this stock now in a lot of trouble. Also, it gets up into this area of resistance and then rolls over. Note, we could talk a lot about candlestick patterns. You see this engulfing pattern right over here, or an outside bar as they call it. That made the top, as it often does. And you can see an engulfing pattern right over here made the top. A huge engulfing right over there made the top. This was an evening star. Then, of course, this big bar over here made the bottom. So very interesting how this works. This is your sell signal right over here. This looks like it's going to decline into mid-November to potentially early December. And Gilead, they're living off that Hep C drug and giving it up, not looking for any more growth in there, is really important. Now, I talked about airlines being weak overall, and take a look at Hawaiian Airlines. Another massive breakdown when you look at that. So very clear cycle rhythms in here. We're always looking at the low periods. You can see that's the cycle rhythms right in there, and you can see how they line up. And here was the low due. Well, was it this one? This one? We're not exactly sure. It's probably over here, but it might be late and over here. It doesn't matter because all of those lows are broken, and this declines out into late January or February. Generally, when you get an elongated cycle like this, it means the sellers are very significant. Also, look at the massive top in here of the big head and shoulders. Now, cycle patterns are what make head and shoulders top. Here's your neckline right over here. And when it broke the neckline, it was finished, that's just an incredibly bad sign. I'm going to put up a daily chart on here for you to see, and you can see that the slim ribbons really, which is our daily momentum, they were negative right over here. They were negative right over here and here. And note the island right over here, and this is where it really turned negative. So slim ribbon negative, staying under the 89-day moving average, failing at the 89-day moving average. I mean, everything negative about that. This is a very bad chart. Points into January, of course, for the end of this declining period in there. So that's a look at Hawaiian Air. Take a look at Alaska Air, ALK. And there you go. Another breakdown, another stock that points to this time February before the low is in place. You can see the cyclical motion right in there. Let's just take a look at these right here. And you could see just the perfect cycle breakdown right over here. And then this perfect cycle breakdown over here. This is a stair-step downward pattern. And what it tells you is that, well, you can see this upward cycle, downward cycle, and now another downward cycle. This is the major trend rolling over right over here, and now you're in this downward channel, and you can see that right here pointing, well, maybe $55 in there, as it has months to fall when you look at Alaska Airlines. One more to look at, rounding out the top 5 of the worst stocks of the week. AMD. AMD has been a stock that's been living off Bitcoin. I believe Bitcoin is a bubble. I do not believe that blockchain is a bubble. So if you separate out the technology from Bitcoin, you've got, well, something very different. Now, massive double top right in here. Note the candlesticks engulfing right over here, dark cloud cover over here, dark cloud cover over here. A massive gravestone makes this double top right over there and then turns down. So this is your cycle right in here. That's this one, you see that? And the cycle right in here, that's this one. So this is upward configured and should have been bullish. It failed here at around the resistance zone of the 61.8 and now breaks underneath that cycle. That points to a decline into December. And AMD, which everybody has loved, along with NVIDIA, well, this one really giving signs of a major top. And like there's going to be a lot more downside in there. So we talked in the beginning of the show that oil was really strong. It's really weird that the drillers are not. Diamond Offshore is strong. That's clearly the best of the drillers, but we have breakdowns in Schlumberger, and we have Halliburton that's really looking sick. So all of that is surprising. And Neighbor is what had the biggest downtick in that group, NBR. Let's take a look at that chart, NBR. You can see in here, amazing how, you know, more and more breakdowns that we're looking at here in a market that is going on the upside, and that shows you the huge disparity or divergence going on in the market. Yes, here's your cycle breakdown right there. Here's the decline that points into January, and that looks significantly on the downside. Note, there was a giant head and shoulders way back over here. It projected to this measurement, and look how it made the measurement and then failed. So that's really absolutely great. Remember, I showed you that hanging man on the S&P 500 in the beginning of the show. The opposite of that is the hammer bottom that you can see right over there. These are very reliable patterns in candlesticks. So a lot of the good, the bad, and the ugly story that we're bringing to you today is about how the candlesticks actually tell the story. And right now you can see these big red ones right in here as the selling comes in. By the way, that's a little abandoned baby doji right there, and that is very typical of making a short-term top, what you see in there in Neighbor. So that's a look at Neighbor, which is a drilling stock, which is an offshore. Now, of course, DO is Diamond Offshore, which is just looking so much better. So if I wanted to buy an offshore, it certainly wouldn't be Neighbor. The next one we're going to look at is in the restaurant category. Here's a stock that just has gotten absolutely ridiculously pummeled. Their earnings collapsed. The analysts are all over this one. They have sharply reduced the number of stores they're going to open because of the major problems that this company has had. They have a really good product, but man, have they had missteps, especially in people getting sick in their stores. You can see the cycle rhythms in here. So this is what we call the harmonic family right in here, and it's made up of two different cycles. Notice how I'm tracing out to the low periods, and notice how this one broke down, right? And then this rally in here formed a bear flag. Right there, you get the cycle violation. Where does it point? Right to about January 1st before a low is made. This is a very ugly looking stock and very much in synchronicity with the rest of the bad stocks, or a lot of stocks that point to January for a correction. When I point to January, it's the end of the correction, in other words. So somewhere in here, there's going to be the beginning of the correction. Here is Whirlpool. This one is suffering from Sears also, as this has moved sharply lower. This was on our list of 29 riskiest stocks for the fourth quarter, and there's been stocks in there that have really started to struggle in there, but Amazon was on that list, and so we have some of them that we just couldn't know that we're going to have corporate news that we're going to be changing the nature of the patterns. In this case, it's always about odds. You know, what's the highest odds? And this one, you can see, look at the head and shoulders in here that's broken down. That points to much, much lower prices in here. You want to know how much lower? Well, 2002 down to this neckline about 168. That's 34 points below the breakdown. So that takes it down to in the 130s. That's a lot of potential downside in Whirlpool, and of course their stuff is sold in Sears, and this is just an ugly, ugly pattern in here. And the last one we're going to look at in here, I have mentioned this stock countless times, saying that, well, I thought they were going out of business, and the stock when it was in the teens, the stock when it was 10, I said this was the most expensive $2 stock that I can see in here. And sure enough, for the first time, we have a massive decline. JCPenney now warns, analysts warning, I warned so much longer ago, and that is Whirlpool. Take a look at here as I switch this over to JCPenney, and look at this as the stock gets down to 276. I believe it's going to be 2 or sub 2. It's going to take some craziness to save this company that they have not been able to do. And this again is a cycle breakdown right in here. If I just grab this cycle low right there, you can see it was trying to hold up right there, right? But then it gets the breakdown in here, and just absolutely having a very rough time. So in this group of stocks in here, and I have people asking me because I had said that I thought Kohl's was bottoming. Now, Kohl's, Macy's, and JCPenney and Dillard's, they all kind of trade together often, and the news on JCPenney has been negatively affecting that stock. So people writing me, do I still like Kohl's? I would say Kohl's is the good. I would say Macy's is the bad, and I would say Dillard's is the ugly. That's it for the worst for the week, and I'm going to be right back to bring you our short-term view for the coming week. All right, short-term view for the coming week. We look only at the daily charts. We are also going to take a peek at the momentum charts that we look at to get a sense for important momentum. We look at 5 major markets in here, and let me get all my notes set up here for you to see. So here is the, well, somewhere in here. Sorry about that. Now I have them. I had them so buried in here I couldn't even find them. So we're going to look at the crude oil market, the dollar, the gold, silver market, the bond market, and the stock market. So at daily charts, we always take an accountability of how we did in the previous week. I wish I could say that we did better. And if the stock market didn't have this huge up day here on Friday, we would have had a really good week. We'd have been up around 70% plus on the week. But then this news came out from all the techs, and that pushed the stock market up. And we had said that the stock market would have a small down week, even though the Russell was down small and the S&P 500 barely to the upside. We still don't get any credit for this call on the stock market. So we're about 50% on the week. We were good on the light crude market. We were good on the bond market, and we were okay on the gold silver market. We thought it would fall and then rally again. Late in the week, well, it fell and chopped its way down, but we didn't see the top yet in the dollar, so the gold and silver market has not rebounded yet. But I'm going to show you that I think it's going to as we look at these charts. So again, we're going to look at daily charts only, and we're going to look at the charts that are in the that show us the momentum. So I have a lot of things to look at in here, and I'm going to get all these charts set up for you right now. So first thing we're going to look at is the light crude market /CL, and that's again on the daily chart. Let me get this moved over. Man, stuff has not been set up properly for this, but we'll get it straight. And here you can see the up move in the oil market. So we said that we thought it was going to be up in the market. We thought that the resistance at around 52.50 or a little higher would get tested. Well, it did much better. It got almost up to $54, which was a little longer term projection that we had. And you can see, based on these patterns in here, what we expect is, now I want you to note the smaller patterns right in here. So you can see this pattern, it follows these smaller cycles right in here. See that? And here's one right here. So you see this right in here? That points to a decline early in the week. So we're going to look for a minor pullback that I think needs to be bought, and then moving again to the upside. That's right in here. So for the week, we're going to call a minor pullback. Now, as far as the market goes, as far as momentum, you can see in here what we have is positive momentum. This is light crude, but it is overbought. You can see this projection oscillator up here. Generally, when you're green and overbought, and over here, this market forecast is giving a sell signal. It's hard to make a lot of upside movement. So we're going to get some choppy, maybe a little bit higher, and some early in the week, and then some corrective movement, very likely, that sends the market into what we think would be a buy area. But right now, you can see overbought, market forecasts sell. And when we look at this, it says to us that our anticipation that we're going to get, a couple days down and then a move up makes sense to us. So something like this right in here is what we're looking at for light crude. We'll look for a pullback. Now, the heating oil, when I look at this, we'll just switch back over light crude. If I put up heating oil, you can see that. That is also quite overbought, and when I put on gasoline, you can see that that's also quite overbought. And that's what that means is that you're likely to get some minor pullbacks in there. But again, they're powerful markets right now, as you could see right in here in the gasoline market. And our objective for the near term is about 181. So again, we'd be looking for just a minor pullback and then another rally when you look at that. So that's a look at the energy market, except for natural gas. Natural gas, which is suffering from warmer weather, is breaking down. Now, it's gotten below this low already, and what we had hoped for was that this corrective piece right there would hold it up above the low, but it didn't. You can see it just absolutely collapsed, and that is a bad pattern right there, and it's suggestive of the fact that any rally we get should be sold. And you can see natural gas momentum has not been able to get positive. It's just been chopping around neutral and negative, and that's just not great. So the natural gas market, we think, is really affected by the weather, and we think it's going to be moving to the downside. So that is a look at the energies. Basically, light crude, gasoline, heating oil, we're looking for pullbacks into midweek and then moving back to the upside. So for the dollar, what we said was that, well, we thought it would go up and test 94 and then roll over. Well, our longer term objective was 95, which is where it got to, and it has not yet rolled over, at least not significantly at all. We thought that the euro currency would go down and then come back up and move up late in the week. As the ECB news came out, that really, we would say, delayed what we were looking for, but we don't think it's far off, and we think the dollar's about to give it up, and we think the euro, for the short term at least, is about to bottom. So here is the look at the dollar as it's slightly up on the week, just getting that boost from the ECB. And see, that's not not a whole lot in here. It's about 1/3 of a point on the upside. And now you can see this is making that resistance level at around 95. And these patterns are pushing to the downside. So we think that the dollar is going to give it up. That should help gold and silver. Remember we said we thought gold and silver were bottoming, and I'll show you that in a second. So we're getting into a period, and we're going to call a failure in the dollar market from this level, moving to the downside, and a down week. Take a look in here. You can see it is quite overbought right there, and market forecast sell signal. That is pretty significant. Now I'm going to switch this over to the euro right over here, /6E, and you can see it's been very negative, and market forecast buy signal, quite oversold right over here. So it makes sense that the euro currency is going to get a bounce. And when you look at the cyclical patterns right in here, this is already run slightly past the low time. So we're looking for a rally in here, and we would expect that the euro could get up into here, which is up, we'll call it 117.85 is where we expect the euro to be to bounce up to in the next, that very well could be 2 weeks, but we see it as an up week in the euro, a down week in the dollar. So here's that momentum in the euro currency, the market forecast buy. I want to show you that in the Aussie /6A, now we're going to look at the futures here, not the cash, market forecast buy in the Aussie. So we're very oversold. We're looking for a bounce in there. there. And when we look at /6C, the Canadian, we are looking at a very oversold and a really low market forecast buy signal right there. Super depressed and very, very likely to get a bounce. So the euro, the Aussie, the Canadian, all looking like they're going to get bounces. The dollar looking like it's going to move down, and all of that speaks well for the gold and silver market. Like they're going to likely move to the upside also. Let's take a look here as we look at the gold market. So /GC is the gold market. If you're, if you don't trade futures and you trade the ETFs, we have for the TOS platform, on our website under resources, you can download a watch list that gives you the ETFs for all of the futures. So it's a really good one, also including some of the leveraged ETFs. So let's take a look here as we look at the gold market on the daily chart. So the gold market is looking to us like this is kind of the bottoming area right over here. For our members, we had quite a number of small adjustments and shifts, and of course with the big movements in stocks, we're going to be sending an update on a lot of these charts. So some of these will not look like they look on your platform. This bottom right over here is important, and the fact that it got, that it got right down to this level over here, which is right near that last cycle low, says that the rally is probably going to be minor. So we're looking at it, this little piercing pattern happening right here as it turns up. And that looks like we're going to get a rally. Now, our upside objective is about 1284 right in there. You can see in here it's oversold in red, so the slim ribbon is right, the top of the slim ribbon is about 1284. So that's really what we're looking for right there. It's a good objective for a bounce, and it's not a very big bounce, is it? Look at silver /SI, and you can see here that is also negative momentum, also getting oversold, but it's a little bit stronger than gold, so it's not quite oversold as the gold market is. /GC is the gold on the momentum, and you can see it's a little bit more oversold in the gold market. So we're looking in silver for a move up, and let me just get this upward objective for you in here. On silver for the week up into the minor resistance. So now again, you can see the dotted lines in here. That's a shifted cycle that's in there, and this points to a low in the next like 2 or 3 days. The gold market points to a low in the next day or two. So they're pretty much in sync. And then the upward objective right over here into the minor resistance for the silver market is around 1204. You could see the little hammer bottom right over here. We're talking about the value of candlesticks a lot in this show, and so that's a good sign that that price level is about the worst we're going to see, just under that 660 level, 1660. And so we think that in this next couple days, if it dips, it's a buy. And then for active traders, expecting that move to the upside right in there. So that's really good. I want you to notice this cycle bottom right near over here. Now these things, it's the old cycle that more is in alignment. Here right over there is your look at a good hammer bottom right over there. I'm really pointing those out because of the stock market signal that we have in here of that hanging man. So just want you to see how valuable those type of patterns are. And this case right now, you have this little hammer bottom, and that's probably good for the silver market. So that's a look at the metals. Next thing we're going to look at in here is the bond market. So what we said is we thought it was going to chop around and then move to the upside. A little more time for downward bias, and then late in the week start to rally after struggling. That's pretty much what happened. It was pretty weak with the European bonds, and now we're at a very important point. On our intermediate analysis, this is the bottoming period, and we had been pointing to a range of timing for a cycle low that we are seeing right now. In fact, the second part of it right in here. So that's where we said that the low was likely to be. Now, I'm sorry, messed that up. Let me just go back to ZN right here. So what we're getting right in here is this engulfing pattern right in here today. So we thought it would chop down and then turn up late in the week, and that's basically what we're getting. So our upside objective for this coming week is to test the 23% right there. That's around 125.02, and then eventually in the next few weeks 125.20 right over there. And this is just the short term. We think that longer term it's going to make, or intermediate term, it's going to make even higher prices, but we're going to look for an up week in the coming week right over there. You can see that momentum has been really bad. It got quite oversold. You had a market forecast buy here, and then it started to turn up. That market forecast buy was in the middle of the week on Tuesday or Wednesday. You had the same thing happen here in the 30-year as it starts to turn up, and you can see that little upward blip. Now momentum is still really negative, so that's why I think you're only going to get these minor moves. For the 30-year, our upside objective for the week, the first one is 152.04, and then working its way up to about 153.10 right over there at the bottom of that resistance zone. So that is a look at the bond market. So now the stock market, well, what we thought was that around March 25th was going to be the time that implied volatilities rallied, and that was the timing that we had for the stock market peaking and entering into a period of much higher risk. So we had that going on, and then Friday came with the massive moves in the tech stocks. Now, it's just a few stocks that are moving the market strongly to the upside, not a lot of them. There's a lot of disparity when you look at that. Now, we thought that the market would chop around and basically have a small down week. That's what we expected, and that's exactly what it did again until Friday. But we're not taking one bit of credit for that, because we didn't really expect that the stock market would have the kind of day that it's having on Friday. So let's take a look at the NASDAQ first, which has had this giant day and is affecting the other cyclical patterns that we look at. Here is the NASDAQ on the daily chart, and what we're looking at is unusual is that you can see this 22 number there on the low. Most of these have been 17 to 20 day patterns in here, and that really extends it out. And then when you get to a new high, then it just flags that we're in a new rising period in here. So we think that this area right there around 62.52 on the NASDAQ is an important resistance level. So you can see the way we have this drawn is that we're going to expect some choppiness. We think only modest little upside in here potential again, and then we think it's going to be a small down week based on what we see in there. Note that the momentum just explodes on the upside in here, and it's a bit overbought. So it's, you know, with the stocks like Amazon and Google and Intel and Microsoft moving up the amounts that they have, it makes sense that they're going to have some at least modest pullbacks in there. We think that this is, you know, a very extended move in here, and likely to bring something in a pullback in the coming week in there. Now that affects the S&P 500 also. Now note that these shifted patterns in here for our chart subscribers are not, they don't look like this. So what we want to do is we want to send some updates to you in the next day or so that you will see these changes that we have in here. Note the 22 days right in there, and moving up to this high confirms that we're in this rising phase right there, and that says to us that again that there's a little more time. We're expecting only a little bit more upside in here, and then a down week. We're going to call a small down week in the S&P 500, and again we're looking for that red bar on the weekly to give us a signal. And again, choppiness that we expect coming up in here, and then because we have January as the time for the bottom of the correction, that we expect it to be rolling over in here. Here's the S&P 500, still powerful strength when you look at that. In the momentum, the Russell also giving you an overbought condition now, as they all are, but the Russell's been really struggling, as you can see in there, And we think that, we're getting a little bit of a pop in here, and the patterns in here are suggestive that it's really struggling. And, it wouldn't surprise me if it tried to make the highs, but basically you can see our projection in here is for it to fail and then to get into that corrective period in the Russell. So we're looking for a small down week in the coming week in the stock market, and we think that stuff is pretty overextended. So we think the risk is growing significantly, and that the Friday day may very well be an anomaly as the shorts really have to step in and cover in those few stocks. Just a few stocks driving the market here on Friday. One more thing I want to look at is the VIX. Now, I talked about that date of March 25th when I thought the VIX would make its bottom and then start to move to the upside. Well, we got signs of that as the VIX popped to 13 early in the week and then pulling down. This really looks like a capitulation to me. And I think that period of higher implied volatilities is here. You just can't tell it by today because there's some big selling going on, but I think overall you're going to see some significant change in there, and we're going to see higher implied volatilities again. So that's a look at the stock market, which we think is going to be small down in the coming week. That's it for the show. Hope you saw some things in there that were of value of you, that you learned some things, and that you found something that you could make some money on moving forward. I want you to be really careful because, man, it's crazy out there. And we're always wishing you great trading.
Well, I'm going to sit and I'm going to do a steady show.